Thanks, Gabe. And so now on to our last session of this launch event. We are joined by 4 of the most opinionated people in fintech, and some may say annoyingly so. And we wanted to mix this up and add kind of like a competitive format to this. So we've asked each of our experts to think about the hottest trend in fintech and pitch it simply for 2 minutes, while the rest of the panel will have to play devil's advocate and argue against their chosen topic.
So if you're starting a business or want to know where to place your money, stay tuned for the next 30 minutes to hear what trends our experts are betting on. So panelists, I hope you've taken some inspiration from the Olympics this week, because this is a battle, it is a competition, and there is a prize to be won. Are you ready?
Yes, absolutely.
Well, I hope so. So first up, we have Amrish, weighing in at 200 pounds, a real heavyweight in the Asian fintech scene, and also known as the godfather of fintech in India. Outside of founding Citrus Pay and currently leading the unicorn Pine Labs, he is a seasoned whiskey drinker and can drink most people under the table. I'm looking at you, Praj. So, Amrish, what topic have you chosen?
About the whiskies or fintech?
Both is fine.
Well, the topic I've chosen is real-time payments. I think real-time payments is the real deal. For those of you who have been hiding under a rock, real-time payments is about moving money, using aliases or even mobile numbers to send money. What could happen in the next couple of years is money could move actually faster than WhatsApp messages, and that's going to have a big impact on the economy which has adopted to real-time payments. We are seeing real-time payments being implemented by many countries in Southeast Asia, Latin America. US has announced plans to go there by 2023, 2024. This provides lots of benefits to the consumer. A, it's extremely simple. B, allows you to keep money in your bank account. C, allows you to move money without having to remember long 16-digit numbers or some SWIFT code. You can literally send money just on somebody's mobile number. This allows money to move in milliseconds. We've already seen the impact of that across the world. For example, in Singapore, the wet markets of Singapore had generally been averse to accepting digital payments. But once real-time payments got introduced in Singapore, most of them have actually moved to pay now. Similarly, in India, we've seen a small entrepreneur who runs classes for housewives. She actually has 10,000 viewers every afternoon at about 4 o'clock. And all that she does is she collects 10 rupees from each of the viewers. So what real-time payments has done is it's also reduced the cost of transaction, allowed new business to come to fore. And this is a real example of how fintech has an impact on the real economy and can change people's behavior and can help businesses monetize. So I think real-time payments is a real deal. It will have the most impact on the real economy.
Wow, that's a very, very strong pitch. And I'm going to come to Melissa in a second, because I'm sure she's got, as a payments expert, she's got a few kind of areas that she might want to poke holes at. But what happens if I like slow payments? You know, I want payments to come out of my account, you know, slowly. I don't want it out of my account within seconds. What's your answer to that?
You're like my dad. He likes checks too.
Yes, I am your father. Okay, so Melissa, over to you.
No, I was just going to give you a little ribbing to say the only reason you'd want that is because you don't have anything in your bank balance. You set yourself up for that one, Pat.
So, Amrish, let me throw a question at you. Real-time payments, yes, a big deal, but the success rates are so low, right? Like if you look at UPI, which is the biggest proponent of real-time payments across the globe, the success rate is a big challenge, right? Like if you see every startup and its cow is moaning about the fact that, hey, you know, this bank doesn't work, how do I improve success rates, et cetera, et cetera. So the good thing about a card or the existing rails which we have is the benefit of being able to do it instant if you don't have another platform. But if the UPI rail is down or you get a rejection, how do you deal with it? Like that's...
No, you make a great point. What the card system has been working on for the 40 years to master, real-time payments, which has been around for 40 months, I think they'll solve it by the 48th month. So, hey, look, don't look back, look forward. I think in the next 5 to 6 months' time, most of these transaction delays would be sorted. We're getting to see actually success rates of almost about 70-75% when it comes to real-time payment transactions in India. Actually, the Pay Now implementation in Singapore is also extremely good.
And as you're the cards guru, what's it on the card side? The authorization rates, so you said 75% RTP, cards rate is what?
You know, you'll be surprised, but in my businesses, what I have seen is cards rate success is still 70 and below, and I'll tell you why. Because people don't remember the OTP, people don't remember the password, they don't remember the 16 digits. All sets of problems actually set in, right? So when you look at in totality, I really do think real-time payments has a better success rate than a card-based transaction. Now, you're absolutely right. If the consumer gets everything right, then card-based payments are as good as RTP transaction like UPI or a QR code on UPI.
Edith, do you want to weigh in on this? Any views and opinions on why real-time payments aren't the real deal?
I'm actually a big fan of real-time payment. I think that in many sense, sitting in San Francisco, the US infrastructure is actually quite behind. In fact, many of the banks are still built on mainframe. Many years ago, I actually worked on a collection system on mainframe in Wells Fargo, and I just can't believe how behind it is. So in many sense, I think on the real-time payment area, there's so much we should learn from India, from China. Asia is like way ahead compared to a developed country like the US.
So it looks like you're supporting Amrish right now. I'm sure, Melissa, you've got a few extra things you might want to say, and then we'll come back to you, Praj.
Sure. Well, first of all, Amrish, congratulations, because real-time payments is really important, except it's not tomorrow's story. It already is. And so it's not about the future. It's kind of about the past. I mean, Pay Now is a great system. And, you know, as we think about things globally over the next couple of years, I mean, real-time payments is already a story. So I don't think it's the next story. So sorry about that. It's kind of disqualified for this purpose. But I do think that it's hard to argue with real-time payments if you have substantial amounts in your account. I think what we need to complement RTP with is different types of settlement for those that still need to finance things over time, which is sort of the role of buy now, pay later, which is essentially just a virtual credit card. So can't argue with RTP, just argued that it's not forward-looking, it's sort of historical in here and now.
It's a fair argument, and I suppose it's the services you build on top of RTP is what's next. But Prajit, what would you like to say?
Yeah, I think, again, echoing everyone, RTP is great, but again, going back to one point which Amrish made, which I'm not a big fan about, is the fact that it actually helps you solve only the P2P use case. Like Amrish and I came in together, we had a cup of coffee, he wants to pay me back. I don't need the money, but if you want to, I'm happy. But
you're not paying him back, are you?
So great use case. But if it's commerce, right? Like for example, one of the most amazing things card rails have done is build trust in it, right? I use a service from Amrish, I don't like the service, I initiate a chargeback. Real-time payments, there is zero protection, right? So Amrish, what do you think about RTP for commerce?
So Prajit, I'm not going to recommend any investor to you, and Arbor is not going to get any of my startups going. Edith, we are going to be friends.
But wait a second, Prajit, why do you think it doesn't work for commerce? I have to take Amrish's side.
I think
it works perfectly fine for commerce.
No, I think the chargeback protection isn't there. So let's say that you buy something on Amazon, right? And you pay via an RTP. Today, you get a product which is supposed to be a laptop, and you get a desktop. You have to actually go back to Amazon, raise a request, get a refund, etc. And if they don't behave, you can't do anything. But if it was on a card, you call up your card company, say, I'm not happy with this product, and you're the card guru, right? There is a difference, there is a buyback protection, and I don't think RTP solves for that. And the other thing which RTP doesn't solve, though we are a big proponent of it, is the amount of risk you take. Unfortunately, the way the governments have devised the laws today, and I think they need to change, is that Amrish sent money to a corporate for an activity, for 3 months, I sit on the liability that Amrish can come back to me and say that I sent the money by mistake. Even though he's used my services, he's gone on a flight and things like that. So there are a lot of issues around RTP which require still solving.
You know, interestingly, I think what you're saying is that what the cards set up as the standards 30, 40 years back is something which will hold true for the future. When you look at what an Amazon is doing and what most of the global e-commerce companies are doing, they're actually enabling faster refunds, faster promotion money going back to the consumer. So really all that you talked about processes should really happen outside the payments layer. Payments layer should only be about money moving from one individual to another. How the refunds happen should really be at a commerce level. And you're absolutely right. What the card networks did was they actually combined what happens at a commerce layer and payment layer and tried to combine it together. I think RTP is just a clean way of moving money from one individual to another and do it exactly how WhatsApp messages goes. So I do believe that processes and business operations will change on the backs of RTP, but it'll bring in almost 3x the consumer base into the digital economy, which is good for everyone. We're getting to see that in India, getting to see that even in Singapore market, where in the last 2 years, 3 years, I think Pay Now has gone into sectors which were not ready to accept digital payments.
Okay, so now we're going to move on to our next victim. So next up, we have Melissa Guzzy, a seasoned pro on the Fight Club circuit. Last year, she went toe-to-toe with Jonathan Weiner and Shiel and narrowly lost on a minor technicality. So she's currently running Arbor Ventures and is hiding out in San Francisco. And so, Melissa, what trend have you chosen?
Well, this is again our opinion, but we think that central bank digital currencies is going to change the entire payment settlement world, where there's going to eliminate the need for USD clearing and also eliminate the need for SWIFT. And it will get rolled out first in Asia, probably from China, who's running some interesting POCs, then spread not only within China, which works very much like Alipay or WeChat Pay, but then also through the Silk Road, Asia, Africa, and then eventually will be settlements to Europe and eventually to the US. Not every economy in the world will have a CBDC, not every central bank, but then you'll see stable coins linked to fiat currency, and it'll change the entire payment infrastructure globally, making it less expensive, but also more transparency, more traceability, less opaque. And it's one of the trends that we're absolutely investing behind and think it's one of the most important transitions we'll see in payments in the next decade.
Short and sweet, but I think you've covered a lot of ground there, certainly globally. I'm going to move on to Prajit. So what would you like to say to Melissa?
I think, Melissa, is there a government project which has ever been done right? Like, is there like...
It's not about a government project. It's about a much higher mandate, as one could say, that the world has been dependent upon USD clearing and SWIFT, and that SWIFT is outdated, and there's a strong geopolitical movement to perhaps not want to have the USD as the clearing currency, and it makes sense given the digital world we now live in to be able to go direct settlement. You have the Bank of International Settlements who's working on it as well, and there's no doubt that there's a role for the private economy and for startups because, as you just mentioned, the user interface to point-of-sale systems, to e-commerce payments and others will be developed by startups in the private sector, and also companies like Visa, who are doing a lot in and around the settlement side to fiat for the use of cards. So we can say we have had successful government projects. Look at Pay Now, Singapore, very, very successful. It's a question of being able to coordinate at different levels of different governments. It won't be the same in every government, but it will happen.
Yeah, I think, like, I don't disagree with some points, but the fact that governments are running it. Pay Now is an infrastructure project replicated like Vocalink, for example, was the original proponent in UK, faster payments. So that's much easier. As soon as you come to CBDC, digital currencies, countries like India frowning upon still. Singapore is doing some path-breaking work around it. But the fact is, for the governments to take a really strong stand, it's working with other governments, it's making it fungible. And I just think that it's a far-looking project. And I know a lot of people are breaking stones, but it's just breaking stones. By the time they have a building ready, it's going to be years and years.
So we're going to sidestep
well,
away from governments,
but I will say this. All you're doing is linking a digital to the fiat, and that's all you're doing. It's not, all you're doing is removing the physical with the digital. And that's just along the same lines of the same trend of RTP, which is we need to have faster settlement payments across the world. It needs to be less expensive. And oh, by the way, some governments don't want to use USD clearing as the reserve currency. And we're in a shifting world where things are going to change. And yes, it may be not 5 years away, maybe it's a decade away, but it is one of the most important transitions we'll ever see in our lifetimes when it comes to monetary policy.
You might have just shot yourself in the foot there, Melissa. Having criticised Amrish for being in the past, it just doesn't necessarily sound like the trend for this year if you're saying it will come into effect in the next 5 to 10 years, perhaps. Edith, what's your view on whether CBDCs will be the biggest impact for this year? Please argue against Melissa.
Okay. Hey, Melissa, what's your thoughts? Aren't you afraid that like the concept is great, but in terms of implementation, right now at least what's running the POC in China is that they dictate all the node. So in some sense, even though it's supposed to be a distributed database, it's really a centralized way of implementing it. So what's your thought into basically making sure that the framework itself is being implemented correctly? That's really the part that I think a lot of folks are afraid of.
Well, to Rebecca's point, I don't disagree it's not this year's trend, but we're a venture capital firm. We invest in not this year's trends. We're investing in things that we think are going to become extremely relevant over the next 5 or 10 years. And if you invest in this year's trends, it's kind of too late.
Very meta. You're picking apart our debate live on stage. To go back to Edith's point, and hopefully we're getting your sound back, the point was about the fear around the way that CBDCs are implemented. So they're implemented in quite a controlled way, and she gave the example in China where the nodes are being controlled as it's implemented. So I guess the question there is around implementation and some of the risks or perhaps the difficulties of doing that.
Well, I think she's exactly right on that, but it's a battle between RegTech and governments having that transparency of where money's moving. I mean, a lot of what you see in RegTech is dealing with, eliminating the opaqueness and compliance around AML and money movements globally, right? We're all in a world of far more compliance and regulatory and regulatory oversight than we've ever been in, or at least for a very long time. And that's exactly right? Is that this solves some of those problems for some of the governments. Now, whether as an individual you like it or not, that's a different debate. But from a monetary perspective, this is a trend that will either happen regardless whether it's physical currency or digital currency. We're going to have more and more oversight. I mean, COVID-19 has been an absolute license for governments to start to implement regulation where they've been tiptoeing around it for the last couple of years.
Amrish, you've been very quiet so far.
There are many countries around the world who continue to use currency to control inflation in their country, and hence where the currency moves and how currency can be controlled is something which is very, very important for many countries. Hence, it is very, very important for those countries actually not to allow digital currencies to get converted from one currency to another, and they want to have control over all of that. A great example for it is why the Indian rupee and why the Indian government doesn't really want to move towards bitcoins is because they don't want rupees to fly out of the country very easily. I think the same argument holds good for CBDC, right? till the time the countries don't feel confident that they can control their currency, I don't think so they're going to embrace CBDCs very quickly. So I do think it will happen, but it is about 10 years away from today. By the way, I just have a point of view, and that is, idea can be great, but it can take you 10 years. So you would have still lost your money if you have invested too early in it.
Melissa, closing remarks for me.
No, well, I think exactly one of the benefits of CBDCs is that you can implement the capital controls as you see fit at any given point in time and vary them. So I don't see that as an argument at all. I see it as a positive for CBDCs. I think, sure, you can invest too early, but usually that's only if you're burning tremendous amounts of cash. I mean, people forget how old Stripe is actually as a company. They only see it now. Or I think Prajit, you started NIUM many years ago, right? It takes a long time to build a company and build a startup. I think what we have seen is that the infrastructure being built for crypto is going to be is a predecessor to what will happen and what will be needed for central bank digital currencies as well as stable coins globally. But without a doubt, you cannot argue that the geopolitical environment is such, with a desire to remove the US dollar as the reserve currency and eliminate SWIFT, or at least mitigate the dependent upon SWIFT, and be able to do direct settlements. Now, whether it's wholesale or retail is yet to be seen. And maybe the concept is further away than people think, or maybe, or than maybe most. But at the end of the day, digitizing fiat currency is inevitable.
Boom.
Mic drop moment. All right, we're going to move on to our next victim, who's a newcomer to this competition, untested and an unknown threat to all of you. Having started out at 500, Edith is now the general partner at Race Capital and has personally made over 50 investments, including 2 companies that have been acquired by Apple, 1 by Pinterest, and an investment that I think will be relevant to the discussion today in Stellar that's now valued at 1.5 billion. So what trend have you chosen, Edith?
Today I've chosen decentralized finance, DeFi. So here's my argument. I think DeFi is redefining the future of finance. It is the biggest force that's changing the landscape of fintech. And I think that there's so many exciting financial application will be changed and completely change how the way that they run. And is also changing the way that we think about permission control, transparency, and risk. And it is a perfect intersection with blockchain, digital asset, and financial infrastructure. And of course, and this includes many, many things, right? From decentralized trading exchanges, lending, stable coins, synthetic asset, insurance, many, many other things. So the value of digital asset, according to DeFi Pulse, in 2019 is about 1 billion. And get to 2020, it increased 1,000% to 10 billion. And then 2021, up till now, is about 80 billions. And there's a very, very particular reason for that. First off, the concept of DeFi, I think, is very, very difficult for traditional finance people to wrap their head around, which is really exciting, I think, as a early stage investors. One is everything is built on a blockchain. So like the concept of it is, in the US term, you don't need Fiserv or Jack Henry, none of this. It wouldn't even need to exist. Second, it's all about open source. It's all about transparency. No more black box. So if you think about it, right, we don't actually even need like flag or anything like this in the future. Second, it's all programmable, interoperable, because now there's a lot of application is built on the same blockchain. And then last but not least is permissionless. So the whole concept of having a centralized or government, that concept doesn't even exist. I have invested in 2 companies, which is my 2, not only unicorn, is actually Decticon. One is FTX. They are one of the biggest derivative exchanges. They're doing about 10 billion in daily trading volume. It's all around supporting many under DeFi token. And then Solana, which now track hundreds and hundreds of projects, is built on top of Solana. There's the biggest rival for Ethereum. And you're talking about hundreds of DeFi developers built on top of it. So to conclude, I'm super bullish on DeFi. I actually believe that it will change how the way that finance will work. And I look forward to investing in the future.
You can't argue with those numbers, can you, Amrish?
No, look, I think that argument is good, and just to be nice back, I do see that around the world, and I actually had invested into a company which was in the DeFi space. To my last argument, what's going to happen is interest rates are now going to be borderless on the backs of DeFi. What that means is somebody could be sitting in Japan, lending to somebody in India, and they could be lending at a interest rate which is somewhere in between. So I do think that DeFi has a very important play. However, in the same investment of mine, one part which I struggled with is I first tried to understand blockchain, then tried to understand coins, then tried to understand DeFi, and then try and understand the applications. I think it's going to take a little while before it all comes into mainstream once again. So yes, out there for a few years now.
Does that mean you're counting yourself as a traditional finance player? I think Edith said it would be hard for traditional finance to wrap their heads around. Melissa, what's
I
your...
still love Amrish.
Melissa, what's your take? You're shaking your head.
Well, I mean, I do think it's an important area. I do think it's got a lot of interesting applications. I think governments are going to wrap their head around how they're going to treat it and tax it. There's been a lot of money made. Is it really sustainable and supportive? Can be supported over a long period of time? Maybe, maybe not. I mean, are we going to see competitors to Ethereum and others? Absolutely. So yeah, I mean, I think it's an interesting area, and I do think it probably has a lot of legs depending upon what happens in the world. So yeah.
There's been no arguments against so far. What's going on here, Praj?
It was a lackluster, interesting.
I just think, just adding on to what Amrish was saying, I think the complexity of unraveling what it means, right? Like today when you go to a bank to take a loan, it's very straightforward. You walk into a bank and you say, and you know that they have deposits and that's how they lend. Now trying to explain to somebody how this money is coming from, like even if you, like I've heard crazy stories where give the money with us and you'll get 5%. Like that's like being back home in India and on US dollars, right? This is incredible. But every time somebody says that, you're like, this doesn't smell right, right? Like, you know, am I going to get cleaned out of all my savings? And I think that's what's happened, right? Like, and there are a lot of positives, and of course, you know, so this is again future looking for me. I think right now, cusp of crypto blockchain is with a very small percentage wealthy people, right? And that change, like everyone sells the vision that, oh, I want the poorest person in Nigeria to be able to buy bread with it and make or save money with it, but that's not true. Today, it's held with people who are obnoxiously rich and can control it. And when it fails, like a coin failed few months back, people say that, oh, it should be regulated now, right? Like, so I just think...
I think to Prajit's point is, will be regulated. I mean, there is no doubt that regulation is coming around that area much more strongly. You're right, Prajit, around that.
Edith, is it just something for the obnoxiously rich?
No, I actually, in fact, one thing I do want to point out, so far, basically the way to think about it, most of the DeFi applications being built is basically building many Plague-like API protocol. So it's definitely not for prime time. And in fact, I think a lot of developers say they wanted to, you know, save Africa. They have never been to Africa, so they don't understand the pain point. And so I don't trust any of them because they have no idea what they're talking about. But I think like right now, what's being built, and it's still really early, is not the it's not really application of the UI layer. It's not there yet. It's really just want to make sure that, and by the way, there's still a lot of work need to be done on the KYC AML side. How is that going to be compliance and work with various different government and make sure that, you know, consumer at the end of the day will be protected. There's still a lot of work. But what I'm excited about really is the DeFi space to redefining infrastructure. No more mainframe, not even the client server. And it's really about decentralization, and making things that is efficient, interoperable, and open source. That's the exciting piece, and I look forward to co-investing with all of you.
I think for me, I put money in a bank today, not on a fixed deposit, but if you put in a fixed deposit, you make 0.005%. And if you put in a DeFi project, you get 5%. There is a reason why, because DeFi is risky. Tomorrow that can be zero. With the bank, it's not going to be zero. You may get your principal back at that element. So a big fan, but right now not for me.
Prajit, so the way this works is if you are in a high inflation economy and where you are getting interest rates, which is let's say at 7 or 8%, while you could be in Japan, wherein the interest rates could be 0 or negative.
Correct.
You end up getting almost the in between of that. That's right. The reason why you get your 4 or 5% on the DeFi framework. And that's what I'm saying.
Hey, you have to be against it.
It just makes it borderless, on the DeFi platform. Well, I'm an investor, right?
It looks like Amrish and Edith are colluding.
I'm an investor in the DeFi project, so I do like the idea.
Edith, I'm going to come to you for your closing remarks. How do you persuade a traditional banker, it seems to be Praj in the room, that's not getting it?
So I like my money to be safe. Right? Like, I'm happy to put in aggressive funds, but I want it to be safe. Like, I don't want to get up in the morning and it becomes zero.
Closing remarks from you, Edith.
My closing remarks is, I think there's definitely still a lot of room to further develop, to further making sure that all our consumers being protected. But the key thing is, as our fellow panelists today, is one of the main reason why now is 80 billion being locked in the DeFi product is because at the end of the day, consumer like to make money. And it's something that when there's money involved, all the developers is super motivated when there's an open source, interoperable blockchain ecosystem where you can really build on. And particularly with Solana, 50,000 TPS is not as low as Ethereum. There's just so much room for us to further develop. Hundreds and thousands of developers, they can't make stuff up. So it's definitely an area all of us need to watch out for. And it's not something we cannot ignore.
Nice. All right, on to our final contestant that needs no introduction. In fact, I'm surprised his head fit through the door today following his company's most recent funding announcement. Congratulations.
Thank you.
NIUM is now the first Southeast Asian B2B payments unicorn. Round of applause. So yeah, huge congratulations to you. But of course, representing MAS today, that will not influence our decision in any way. This competition is based on merit alone. So Mr. Unicorn, please take us away.
Perfect. Thanks, Pat. Thanks, Becca, for having me. Thanks, esteemed panelists. And my topic is going to be embedded finance. And as you guys have rightly said, this is the future, right? And the reason why I call it the future is, let's give a hypothetical and possibly a real situation. 2 years from now, you open Financial Times online. Pine Labs has gone public and reported their stellar, most amazing quarter they've ever had in their history. And everything is amazing, and you see a buy button on besides that comment. You click buy, you put 100,000 shares to be bought, click submit, voila. At the back end, your Charles Schwab or your Robinhood or some of the other account has actually been triggered. But in reality, you bought a stock based on a FT article. So basically, that's what embedded finance is all about, where financial services is going to become invisible. It's going to be embedded in what you do daily. So for example, you use Grab in Southeast Asia, you use Uber all across the globe. You don't need to go into your bank account to see your balances. You'll actually click onto your Grab or a Uber app and start seeing your balances. You start seeing your credit card statements, etc. So your life in financial services is going to be completely embedded, and you will not see, and financial services will be brought to you by the apps which you use regularly, but powered by a bank. Great story which is being developed is the Apple Card Goldman Sachs story, where people see Apple as a proponent, but it's really Goldman Sachs who does all the heavy lifting and work. And going back to an important point Melissa made earlier in the conversation, embedded finance is a hot story because the VCs have just given it $1 billion over the last 10 days, and this is the next 5-year plan. So I'm super excited with the whole proposition of how this is going to play out.
Embedded finance. Melissa, I'm going to come to you first.
I mean, embedded finance is not tomorrow's story. It's still pretty much like real-time payments. We're doing it now, which is great. Like I completely agree with Prajit on how big. I mean, the market is still in its infancy compared to where it can go, and I think it will continue to grow. But the trend has already started. The question will be, at what point do lines get so blurred and companies become regulated because they're actually financial institutions, versus, an e-commerce company or some other entity, or, who's going to regulate the fact that somebody is buying FT stock after reading an article or a particular company, and who's responsible for the compliance. But I'm a big believer in embedded finance. I just think we're already well on that trend, and it's not tomorrow's trend, but it's still in its infancy and will grow tremendously.
Yeah, and I think just going back, I think at core you need to believe and see it. Like, for example, I'm a strong believer that the largest card issuer in the US is not going to be a bank. It's actually going to be Kim Kardashian, right?
But Prajit, card issuance is so old already. Like, everybody issues
Correct,
a
but
card.
Kim Kardashian or Kylie doesn't issue a card, right? Like, it's like, I think that's the differentiator. That it's like, look at Mr. Beast, right? Mr. Beast automatically became the largest producer of burgers by just putting out a tweet saying that I have started doing Mr. Beast burgers. Mr. Beast is a very big YouTube influencer, and he just suddenly decided that he's going to be, and he created 4 different burgers, put them on DoorDash and all the other food apps, and voila, he had more outlets than McDonald's in the US, right? So that's, in a way, it's not embedded finance, but in a way, that's the way we see world to go into.
Is this the real reason you're moving to the US?
To eat Mr. Beast burgers.
You must love burgers.
You can see that.
It's a temple.
Amrish?
Well, like the Kardashians, Prajit is a great marketeer. And all that he has done is he's just renamed real-time payments as embedded finance. I mean, who's embedded finance? It's Mr. Real-Time Payments who actually solves for big issues like embedded finance. Go invest into real-time payments, you'll solve embedded finance, you'll solve for, faster money movement. You can do many, many more things. So yeah, right. In real-time finance, real-time payments area, one of the things that we will solve for is delivering embedded finance.
I don't think that's correct, and you being an investor in NIUM, you shouldn't be saying all these things publicly as well. But I think what the whole concept is the unique one, right? Like, imagine the power of that concept where you see a block, and I hope it's not a hypothetical, it's a real situation where you have a blockbuster quarter, and I'm on Financial Times website, and I can buy your stock.
And real-time payments is there.
No, it's not real. It could be card rails right now. It could be bank rails. It could be any of the rails. Like, keep the rails aside. It's the power of the concept. Right. The power of the concept
But the power of the concept is real time.
So what's the difference between that?
the concept is real time. It is real time, but it's not the concept of payments. Is like, going back to one of the interesting things he said. Payments is the transaction layer here. Right? The whole aspect of the whole product is not the payments part of it. It's being accessible. It's being available. It's being right there, right time. How many times have we woken at night and said, I want a chocolate ice cream? I generally do. But how many times do we get it? 0, right? But imagine if you can just say chocolate ice cream. Voila. That's what embedded finance is. That, okay, we're sitting here and Edith just told me great things about Solana. Like, I should have a screen here, buy Solana.
Prajit, you're just talking about instant gratification, which is exactly what RTP is.
No, RTP is a smaller, I think, going back to my embedded finance topic, I'm just going to reverse it.
Hey, Pat, let him talk.
RTP is a part of embedded finance. Embedded finance is the bigger envelope.
Now you're just trying to eat all of the ideas in one.
Yeah, DeFi included, yes.
Sounds like you're talking about Star Trek.
Edith, any comments?
Yeah, I have two questions. One is, you would think, which is not that Facebook haven't tried, right? So they were trying to do Libra, which completely just did not work out. And you would think that they probably should have followed the footsteps of Tencent with WeChat, but unfortunately, still not happening on Messenger. That's one. And then second is, let's say, as the Kim Kardashian or the Kylie example, they have to count on somebody else to
Right.
provide the ability to let them transact. So which means that I have to count on a API or some other companies, and there's a lot of risk there, right? Because now I'm sharing a lot of data across where you can think it's beneficial, but still, now there's another party is involved. So again, I'm going back to implementation. The idea is great, but even the biggest company in the world
No,
wasn't
I think,
successful at all.
I think,
It's
and I have actually a linked answer to that. And one of the reasons why big techs are very cautious on something like this, because in financial services, like Amrish and I do this day in, day out, when you get fined a percentage of your annualized revenue, right? So, like I was just reading the other day, last night, I read the fact that Facebook's going to announce $100 billion revenue quarter. $100 billion, right? So when they're going to get fined for doing something wrong, they are going to impact that 100 billion, which is today's zero financial services, everything related to that. So one of the reasons big techs take a very cautious stand, and that's where players like so many of us have mushroomed over the past across the globe, where we provide the financial infrastructure, we provide the licensing, we provide the card rails, we provide the real-time payments rail, we provide the debit rails, the credit rails, the whole infrastructure. And what you're seeing on top is just the brand, right? So the future, it's like the Apple Card, Edith. I don't know whether you use it. No one talks about Goldman Sachs. Everyone talks about Apple because that's the fronting brand. And that's what our view is. Airbnb will be lending to its host because they get to see the host bank account much better than even their own bank, because they're seeing the visibility over a year, how many people are booking such properties. Uber drivers can get a loan on a Jiffy. I think these are things, or these are concepts. But going back to your point, the implementation should not be done by big brands. They don't understand financial services, and they should let experts like us deal with it.
All right.
That was self-serving.
It was self-serving, but I don't know if that critiques the argument to say. All right, I think that is all we've got time for today. So all that's left is to crown the winner. Who are you leaning towards, Pat? What do you think?
I think it's a real close call. But I just want to do a quick poll around the panelists. So you can't pick yourself, Prajit. I know you love yourself that much, but you can't pick yourself. So if you had to pick...
Melissa.
Melissa?
Yeah, I have to say that I'll go with DeFi.
Okay. Melissa, Edith, who would you select? You can't pick yourselves.
I really like the concept of embedded finance.
Yeah, I'm a payments freak, so I'm on RTP.
Ooh, this is a mixed
here's the
panel.
funny thing.
Okay, well, I
But
think...
here's the funny thing.
I think
All of these topics are
it's a tough
interrelated
call.
Yes.
in some way.
Yes,
None of them were actually discrete at all.
correct.
There's a Venn diagram somewhere here where they all cross over in the middle.
There's a Venn diagram, absolutely, but they're not
I
discrete.
drew it. I said embedded finance, DeFi, RTP, CBDC, right?
I don't think we can make you all winners, though. It's really unfair.
Why not? We're in a new world of getting along and kumbaya.
It's a decentralized world, guys. We're all winners. We're all winners today.
There can be only one, though, unfortunately. And I think he's going to be unbearable for the rest of the weeks to come.
Ooh.
But Becca,
It pains me. It pains me to say this. We might need some bigger doors to the studio. Prajit, you are the FinTech winner today. Stand up and take a bow.
Take a bow.
We're gonna stash.
Great. Thank you so much to all of our panelists here in the studio and also in San Francisco. Over to you, Gabe, to close us for this launch event. Thanks for joining us. A round of applause again.
Thanks, Melissa. Thanks, Edith.
Great competition.
Thank you.
Thank you.